Disney has announced that they are going to be cutting 7,000 jobs and also trying to reduce costs by $5.5 billion. So this was all announced during their earnings call, which was the first earnings call back for new CEO Bob Iger in his return back to Disney. Many speculate that he returned back to Disney because of the lack of success that they have seen with the Disney Plus streaming service. So Iger announced that they will be restructuring the company into three different areas. The first will be Disney Entertainment. The second will be Disney Parks. And then the third business unit will be ESPN. He also mentioned about ESPN that there are no plans of doing a spinoff with ESPN at all. So where will some of these cost saving structures come into effect? Well, Iger did announce that $3 billion in the cost savings will be structured around Disney Plus and their content creation. So a couple big things to note in the future about Disney. So obviously they want to reduce the large amount that they're spending on content, and they will be bringing back some of their more popular animated features, such as there will be another Frozen that they're coming out with, and also another Toy Story. He did note the success of Avatar and how they're going to start to incorporate that into their parks. Couple things to keep in mind. He did mention cost increases potentially at the parks and also with the streaming service. There's also a headwind with ESPN because the NBA TV rights are coming up and they will have to be negotiating that, and that could lead to a larger cost for them as well. So one of the major key takeaways was that he did say that he wants to get Disney Plus profitable by the end of fiscal year 2024. So for the last quarter, Disney Plus actually lost $1 million. So they will have to drastically change the way that business is structured. They'll have to get a lot of scale and new content out there. They also announced that there will be a succession planning committee and that he wants to be out from Disney again in 2 years. So lots to unpack with the stock. The stock market so far has reacted positively to that. Pre-market trading, the stock is up about 6.5%. One key thing to keep in mind is that Nelson Peltz, who's a big activist investor, is continuing his proxy battle with Disney to get a board seat. One of the major issues that Nelson Peltz has is that he wants Disney to reinstate their dividend. That is something that Bob Iger mentioned they may be open to considering sometime around the end of this calendar year. So a lot to unpack with the Disney stock and what will happen to that company going forward. So far in the short term, the market is reacting positively, but there could be some hard changes in the future for them. And obviously, a lot of companies are trying to grasp how their streaming services will work. There's a lot of competition there and a lot of battle for content. So things to be aware of if you're an investor in Disney stock.